On today's episode, we are going to take a look at Facebook. They just reported earnings and the company is up about 10% after hours. So let's get started. Before we begin, guys, don't forget to hit that subscribe button, the thumbs up, and hit the bell. It is earnings seasons and I'm dropping about 2 to 3 videos a day. Again, thank you guys for taking the time for watching this video. So let's get started. All right, so first let's take a look at this company's stock price performance. Right now, like I mentioned, this company is up close to 10%. If we look at the all-time highs in like January or February, let's just do a February, which was closer before all this started. This company was sitting at $217. So this company is only about $5 away from there, so close to a 3% difference. But let's take a look at how far this company dropped. Facebook actually dropped about 33%. It lost almost 1/3 of its value compared to February. And one of the big reasons we're going to take a look at is one of the main ways and the biggest way that Facebook makes its revenue, similar to Google, is through advertisements. And advertisements is usually one of the first expenses that gets cut off by businesses. So once the shutdown started to happen, investors were worried that a lot of businesses were going to cut down on advertisement. And this is true. We just watched Google yesterday and they mentioned that this is happening. But right now it does seem that it wasn't as bad as expected, and that's why we're seeing such a great increase in price today. All right, so now let's just take a look at the results of their earnings. So this was for Q1 of 2020. Q1 GAAP earnings per share were $1.71 and it beat by a penny. Revenue was $17.74 billion and it beat by $520 million, and that's up 17.6% year to year. Remember, just one thing I like to keep in track in all these videos is Q1 pretty much only takes effect of 2 weeks that were affected by the whole coronavirus, by the shutdown. Most of these earnings ended in late March, and the close down and shutdown pretty much only happened in the United States in mid-March. So they've only experienced about 2 weeks. So I do think Q2 is gonna feel a bigger impact, especially because we have pretty much the whole April of close down. All right, so now let's take a look at some of the highlights for this quarter. Like I mentioned, revenue rose about 18%. Operating income jumped over 78%, and that's due to higher margins, and net income more than doubled compared to the same time last year. Usage came in slightly higher than expected, and you might go like, hey Jose, no duh, they came out higher. A lot more people are home. But one thing to keep note on is these are moving numbers, so analysts keep updating their estimated numbers. And after seeing Snapchat last week that provided great numbers in active users, these analysts also updated those numbers. But even after those updated numbers, Facebook still did really well. Daily active users at 1.73 billion on average for March, and that was up 11% versus the expected 1.7 billion. Monthly active users were 2.6 billion as of March 31st, and that was up 10% versus the 2.55 billion expected. Like I mentioned, Facebook does say that they saw a significant reduction in the demand for advertisement as well as a related decline in the pricing of their ads. And that makes sense, right? If there's less ads going around, then there's less fighting between ads, so the ads actually drop down in price. We're going to end up looking at this company's balance sheet in a bit, but liquidity was $6.3 billion as of March 31st. But it's gonna probably be about $10 billion. It's probably about $10 billion less right now because Facebook just invested 5.7 in Reliance Jio, and they had to pay $5 billion to an FTC settlement. And I was like, who the heck is Reliance Jio or Jio? And I had to Google it. So Reliance Jio is just this telecommunication company with a lot of different companies in India. So it's this major communication application and business in India. And one of the things I saw they're doing is Facebook is actually using their WhatsApp, so you can actually order through WhatsApp for groceries, and I think that's actually pretty smart. And one thing I think is good is this company has plenty of cash to go out there and buy different acquisitions at the moment. Facebook also just purchased some form of video conferencing to rival Zoom. So stuff like that, it shows you that this company is spending money when it needs to. And right now, companies are actually pretty cheap due to everything dropping. So in my mind, companies that have cash right now should actually be using that cash to buy products that are going to help them grow in the future. And Facebook does seem to be doing that. So even though Facebook did say that they saw a decline on ads, Facebook also mentioned that in early data of April, they're seeing data that shows a little bit more promising. So obviously they didn't give any numbers, but just they're saying that it looks a lot better than expected. And then finally, Facebook says that they are focusing on enhancing their key services. So right now, the major ones they're focusing on is real-time video experiences and live game streaming, with a lot more people communicating with other family members through webcam and stuff like this. Facebook believes that's a huge portion. And live game streaming, I think Facebook is another one that I'm pretty bullish on. Pretty bullish in the esports sector. And Facebook has also entered that sector with these live gaming streaming. And right now, with more people being at home, more people using computer, more people live game streaming, more people even on YouTube, is helping out this type of platform. All right, so now let's take a look at this company's revenue breakdown. So total revenue for this company, like I mentioned, was $17.7 billion. Out of that $17.7 billion, 17.4 comes from advertisement. So we can see why a lot of investors were worried about this company, and we saw that big drop. Only $297 million. So what's that? That's probably like 3%, not even 3% comes from other. And other is just the other segments that Facebook has. And this would be like their Oculus Rift. And the only other thing I want to mention here is operating margins. Operating margins, same time last year, was 22%. Right now is 33%. And that actually helped this company's total net income increase dramatically. Another thing that helped this company is effective tax rate. Effective tax rate for this company last year was 30%, where right now is 16%. So this company was able to keep a lot more money after taxes this year compared to the same time last year. All right, so now let's take a look at this company's income statement. And we already talked about the revenue. There's not much change in anything else. The only one I really want to mention is research and development. A company like Facebook is a technology company. If you guys have been watching my channel, you guys know that I personally am a fan of seeing research and development increasing. That means they're working on a lot more projects. They're working on developing, of strengthening their cores. And that's what I like to see in a business, especially in a technology business, right? You have to make sure everything is up to date. Same time last year, they spent about $2.8 billion in research and development. Right now, they're spending about $4 billion. So that's definitely good to see. Next, let's take a look at this company's balance sheet. And again, if you guys have been watching my channel, you guys know that the balance sheet is my favorite statement to really take a look at. So right now, let's take a look. Let's start from our bottom way and from the top and work our way through the bottom. Total current assets. So total current assets this year were $69.3 billion compared to last quarter. Last quarter was 66.2. So an increase of total current assets by about $3 billion. And the main places where this comes is actually from cash and cash equivalents and marketable securities. If you guys don't know, cash and cash equivalents and marketable securities are assets that can actually be turned into cash really quickly. And to me, these are the ones I like to see. So cash and cash equivalents right now is sitting at $23.6 billion, and that's up about $3 billion compared to just 3 months ago. The second is marketable securities. Marketable securities is $36.6 billion, and it's up about $1 billion compared to a quarter ago. There have been a little drop in the other current assets, but nothing to really throw a red flag. But look at that. This company has about $60 billion of cash at hands. Next, let's take a look at total assets. So total assets for this company is sitting at $138 billion compared to $133 billion just a quarter ago. So that's about a $5 billion increase. Remember, we saw about $3 billion increase from total current assets. The other $2 billion actually come from property and equipment. It seems like this company bought $2 billion worth of new equipment and property in the past quarter. That's again, nothing crazy, and nothing else in the total asset, in the asset sheet is really giving me a red flag. Now let's take a look at liabilities. Let's just go straight to total current liabilities. And total current liabilities compared to just last quarter are pretty much flat. So when they're pretty much flat, and I look through the numbers, there's nothing that has changed dramatically. So there's no real reason to dig deep into them. Next, let's take a look at total liabilities. Total liabilities compared to just a quarter ago increased by 700 million. Right now sitting at 33 billion, where last quarter it was at 32.3 billion. So again, not a big difference. And one thing I do like here is Facebook does not have any long-term debt. And this is actually pretty happy. Facebook has such a strong balance sheet. And if you guys have actually been watching my channel, I have constantly been doing the top companies I've been buying throughout this whole process. And I'm not gonna say I'm lucky or I'm not, but the ones that have made those lists constantly that I've been buying dramatically in this past 2 months have been Facebook, have been Google, have been Microsoft. So I'm actually pretty happy with how all these have turned out. Again, I'm here for long-term investments, so even the 10% increase is not something to really jump up about because I'm here for the next 2 or 3 years. All right, so finally, I'm here in seekingalpha.com, and I like to use Seeking Alpha because I like to look at their annual earnings per share estimates and look at the forward PE ratio for the company. And this helps me determine if I think the company is a little bit overvalued, undervalued, or fairly priced. For December 2021, this company is expected to make $9.39. So with $9.39, this company at the current price of, let's say, $210, let's say $215 to see where it might end up. So $215 divided by $9.39 give this company a forward PE ratio of 22.8. To me, a company like this, anything below 20, I think it's pretty cheap. And we can see before this jump in price, this company has actually had a forward PE ratio of less than 20. And that's one of the major reasons I have been buying constantly Facebook. Right now, sitting at a 22.3, it does not seem overly priced, but it's not actually screaming to me to really jump in right now. If I want to nibble a little bit here and there, that's it's like I said, it's not overly priced. It's not, it seems pretty valued, equally priced right now, a pretty nice value. And one thing, right, we can see, right, this is a growing company. Revenue estimates for this year is supposed to be 74 billion. For 2021, it's 94 billion. We're seeing this company is continuing to grow revenue. We see this company has such a strong balance sheet. And that alone, just that strong balance sheet, gets me so pumped about this company that it kind of sometimes takes away and even proves that it's a little bit more undervalued. I mean, when you have no long-term debt and have about $60 billion in cash, with all the cash you can pay off your total liabilities and still have cash left over. Those are companies I like to invest in. We're seeing user growth. The only thing I do wish is I wish Facebook was collecting more revenue outside of advertisement. But right, Facebook right now is in so many strong platforms. They have Instagram, they have Facebook, they have WhatsApp, and they're constantly trying to fight the current trend that's keeping social the people's awareness and eyes on. And I think that's pretty smart on Facebook to do. So like always, guys, I hope you guys enjoyed today's episode. Let me know what you think. Make sure to subscribe, post a thumbs up, and check out my other videos. I actually just did Boeing, and next I'm not sure if I should do Microsoft or Tesla, so let me know which one I should do next. Take care, guys, and have